on coming down to the stock markets and how do you see the markets now panning out? This was one big signal, one big milestone that they were looking at. What do you think is going to happen?
I think that the budget is pretty much a non-event. The markets were quite euphoric as far as the budget is concerned. It was a bit of a relief rally. But even if you look at what's happened in the last 2 hours, if you look at the Nifty, which is the number I follow more, the Nifty went up from 4855 to close to 5,000. But just before we recorded this, it was down to 4930. So it put on 3%, it lost 1.5%, roughly, of that 3%. Where it opens on Tuesday is going to depend a lot on what happens in terms of global cues. Globally, I think that we saw massive retraction in markets in 2008. We saw a pullback in 2009. 2010 is very tentative. It's marginally downwards. My own take is more inclined towards the negative side as far as the rest of 2010 is concerned. And India is not going to be any different from the rest of the world.
What about buying opportunities? That's something which our readers would be interested in. Even in this so-called non-event that you're talking about, are there buying opportunities here? Certain sectors, certain stocks, certain things to look for?
Actually, over the last 3 months, I've seen more selling opportunities than buying opportunities. That's assuming that one remained in the markets in 2009. Unfortunately, what a lot of people, retail investors, did was sell at the bottom of the market, which is very normal, and they haven't yet got back in. I mean, lots of people who said, we sold because we made such huge losses, and then we never got back in. But yes, there are always buying opportunities. I think whenever I say there's a buying opportunity, the thing that I'm careful about is people often look at buying opportunities as something that I can invest in today and make money 3 months from now, and then when they don't make it, they feel disappointed. That's not the way in which I look at the markets. I think I prefer to look at the market in structural terms, and I think that as far as the Indian market is concerned, I think pharmaceutical companies are still very, very reasonably priced.
So you're going back to that defensive sort of pharma, FMCG?
No, pharmaceutical is considered a defensive sector. I don't consider it a defensive sector at all.
Okay. Some of them have been growing really well.
Yeah. I don't look at it as a defensive sector at all. I look at it again from a structural point of view. If you look at what's happening in the overall healthcare industry, you see that the healthcare industry is moving away from the government towards the private sector. It's moving away from the individual practitioner to a more corporate structure. What happens with that is that you see a move away from generic drugs to branded drugs. This is a structural shift, and it's not going to stop.
There's this whole talk again in the budget and the speech about divestment, and there was a lot of interest in the morning about all these potential candidates. Now, isn't that a bit of a hot air balloon? I mean,
look, as far as I'm concerned, if prices in the markets are a function of demand and supply, so if there's more supply of a certain paper coming in, as far as I'm concerned, that's a bearish signal, not a bullish signal.
Yeah.
From the point of view of the economy, yeah, it's a good thing if the government can raise some money and lower the deficit as a result. But in terms of pricing those individual stocks, it's a signal to me to sell the stock, not to buy the stock.
What happens to interest rate sensitive sectors like auto and construction, housing finance? What happens there? Banks?
Well, I think you can't put all of them in the same category. As far as automobiles is concerned, I think there's been a bit of a relief because there was a worry that everybody knew that excise rates are going to be hiked or rolled back. The worry was whether it's going to be 2% or 4%. So there's a relief that it's only 2%. I think the other significant positive as far as automobile sector is concerned is the change in slabs of income tax. What it means is that people at the middle income levels, people with incomes of between 2 and 8 lakhs of rupees, are going to see an addition to their post-tax income. I think that's a significant positive as far as the automobile industry is concerned. There are valuation issues though. Number one, auto sector stocks have run up hugely over the last 4 or 5 months, and I suspect that there may have been some replacement buying because people were worried about what's going to happen in this budget. So, I'm not going to rush in and buy those stocks. And one would have to see what happens. I don't think any of those stocks are a bargain today.
Real estate, construction?
It's a valuation issue.
Okay.
And as far as real estate is concerned, I see real estate in 6, 7, 8 year cycles. And I think we hit the top of the cycle about 2 years ago in 2007, 2008. And when the stock markets rallied from the 2,500 level in March of last year through to the roughly 5,000 level where they are now, real estate stocks went up in sympathy. But I don't think that we're seeing that kind of buoyancy in the real estate sector, either in terms of volumes or in terms of prices. Real estate companies are having to chop and change their plans. They're having to convert commercial into housing. They're having to move from premium housing into low-cost housing. All of these cost. But more importantly, on the balance sheet side, they're all sitting on very, very large inventory and very, very large borrowings. They're going to use every opportunity in the market to cut down those borrowings and to cut down that inventory. So I don't think that their turnover is going to go up hugely, and if it does, it's going to be at the cost of margins. You see margins of the big players coming down sequentially.
How about two other important high interest sectors like IT and so-called infrastructure?
Well, IT is purely a play on the world economy, and as I said, I'm not very sanguine on it. I don't see global growth returning to very rosy numbers. People are talking about global growth in 2010 of 3.5%. I don't see that number, quite frankly. In any case, for us, the important thing is not global growth. For us, the important thing is growth in the developed nations, because we're not exporting to China or to Korea. We're exporting largely to Western Europe and to the US. I would be surprised if we see positive growth in both of these areas, either the Eurozone or the US or the UK. Having said that, there is a pressure on them to outsource. So I have a sort of a neutral view as far as the IT sector is concerned. Within the IT sector, I would tend to favor the second tier stocks, which have much lower PE ratios. I think the majors are fully priced. I don't see an upside. I'm not bearish on them, but I wouldn't go in and buy any of them. I think the run-up they saw in the last 3 or 4 months has sort of taken them to fair pricing.
So basically the message is quite clear that don't expect the inflation to come down in the near future. The interest rates sort of can only go up slowly.
Yeah.
And if you're looking for some kind of area where you can go and hunt for stocks, pharma is possibly one of them, and second tier IT stocks. So that's our message on this day when the budget got presented. Thanks a lot.
Thank you.